The stock market's post-Thanksgiving hangover, will the rally fizzle out? As the world awoke on November 28, 2025, investors were met with a sense of uncertainty. The previous week's euphoria, fueled by hints of Federal Reserve interest rate cuts, seemed to be fading. But here's where it gets interesting. While global equities had experienced a sharp rebound, the momentum was starting to stall, leaving many to wonder if the rally was running out of steam. A global pause in the rally. In Asia, stock markets were poised for a subdued opening, with equity index futures in Japan and Hong Kong indicating modest declines. Australian shares, too, started the day in negative territory. This hesitation came despite the fact that a global stock gauge, as measured by the MSCI World Index, had ended the previous day unchanged, yet still on track for its strongest weekly performance since June. And this is the part most people miss: the market's reaction to potential Fed rate cuts is often more nuanced than it seems. The Fed factor, a double-edged sword. The prospect of lower interest rates typically boosts stock prices, as borrowing becomes cheaper and investors seek higher returns. However, the Fed's decision to cut rates can also signal concerns about economic growth, which may outweigh the benefits of easier monetary policy. This controversial interpretation raises an important question: are investors overly optimistic about the impact of rate cuts, or is there a more complex dynamic at play? What's next for the markets? As U.S. stock futures remained flat following the Thanksgiving holiday, it's clear that the market is at a crossroads. Will the recent rally regain its footing, or will concerns about global economic growth and the Fed's next move weigh on investor sentiment? The answer may lie in the coming days, as traders digest the latest data and reassess their positions. A thought-provoking question for our readers. Do you think the market's reaction to potential Fed rate cuts is justified, or are investors underestimating the risks? We'd love to hear your thoughts in the comments. Is the current rally a sustainable trend, or a temporary blip in a more uncertain economic landscape? Let's spark a debate and explore the differing opinions on this crucial issue.